Hello traders everywhere, Adam Hewison here, president and founder of INO.com and co-founder of MarketClub with your market update for Friday the 25th of January. Well, it's turning out to be quite a month, January, but the big news is Exxon regains its crown as the most valuable company in the world while Apple is losing value by the minute. Can you believe that? But the bad news keeps on coming for Apple as it continues to erode in early trading today. It would appear as all confidence is rapidly disappearing from the stock. You know, in today's letter, along with Apple, we'll also be covering the energy markets, precious metals, forex, and the equity markets. Also, we'll be covering 6 stocks on the move today: Weyerhaeuser, Hasbro, Yum Brands, Netflix, Kla-Tencor, and finally Verisign. So don't forget to watch and share your comments with us on our blog. So let's get started right away. Let's go to our portfolio manager, and we'll start with Apple, which continues. We're currently trading at 440 on the low of the day practically. And the question is, how low can Apple go? Well, look at the action here. You've had this. This is now an enormous top for Apple. And let me just put this here. So let me just go take that off the screen. But the reality is this market's in serious trouble. We talked about this, the measurement. Let's scope this in just a little bit further. This is a daily chart, but we're going to be looking at a weekly chart. And if you look at a weekly chart, it looks even more damning. And that's the weekly. Look at that. Does not look good. On a measurement standpoint, let's just close this in just a little bit. So let's just go right here. Plus. That's good enough. And what we could look at with this market is this. We talked about this on Bloomberg when we were interviewed, but here's the high right here, and here's the recent low. That's $100. So if we take this number, 500, subtract it from 600, it gives us $100. We can flip that around, flip this formation down this way, and that takes us to $400. The market's extremely oversold. It doesn't matter. The reality is people want out of Apple, and it seems at any price. Now, we've said the big move, they sold more iPhones than they've ever sold before. So what has happened? The perception has changed. It's totally changed for Apple. Instead of being a leader now, it may be an also catch-up model as Samsung. Lots of other smartphones are coming online with lots of things that are very attractive to consumers, including the number one, price. Price is very important to everybody right now. So here we are looking at Apple trading down. It's currently trading at $441, and that is a 52-week low. And again, remember what we said about 52-week lows on a Friday? Chances are it's going to be lower on Monday. But this is what we're looking for. Around this level of 400 level is a target zone, and it's derived from this point here. And that also dovetails if we go all the way across the board, right to here. It sort of dovetails well with these previous lows that the move started from. So let's clear the screen and go to our next market. Lots to cover today. I'm going to cover in a number of stocks that we think are interesting and on the move. So we're looking at this on a weekly basis. Now here's Exxon Mobil. During the same period, and let's just do the last 6 months, this is a weekly, they went up. Look at this, 1, 2, 3, 4 weeks in a row we've seen Exxon Mobil go higher, partly because of the crude oil prices, but also partly because it's a very good stock. You also have this double bottom right here, which is another positive for this market. But you look at this, then you go back to Apple, and during the same period, you had 3 weeks going down. So again, you can see how the value switched from Apple being the most valuable company in the world to Exxon. So let's go move right along here, and let's take a look at our, whoops, we just missed one there, and that was actually the crude oil. You can see the crude oil is actually, we've had 1, 2, 3, 4, 5, 6 weeks in a row. We're sort of making a top, not a top, but we've reached a steady point here. It's basically unchanged for the week. We closed last Friday at 95.89. We're at 95.92, practically unchanged for the week, but nonetheless, still a pretty good performance in this market. We're still bullish on this particular commodity, which means we're bullish on Exxon. So moving to gold. Gold, look at the difference in gold. Gold has just gone sideways for the past 6 weeks. Now, my big thing with when I was interviewed for gold, basically what I was thinking here is, first of all, our trade triangles are mixed. tells you basically it's a trading range. The second thing, and the way I say that, you've got your monthly down, the weekly up, and the daily down. Very mixed picture. So the reality is all the building blocks are not in place yet for gold, and this is not a good close for this market. It's going to be close to, if it closes down here at 1660, it's going to be one of the lowest closes we've seen. We've only seen 3 lower closes than this in December. So let's see how this plays out, but I'm not anxious to jump in and buy gold right now. I think there'll be time later on when inflation kicks in. So let's watch that carefully. Excuse me. Now, what is interesting here, and this is a big one, this is the euro versus the dollar. And look at where we're closing today in new high ground. If we scope this out just a little bit further, excuse me, you can see how we've got this market really has built this large base, very large base. And the highest close we've seen here is 34.50 with 34.62. So this is going to be a new, if we close up here, it'll be a new 52-week high close in this market. Now, you know what that means. It means on Monday, chances are the euro is going to be higher against the dollar. Again, a very positive sign. Closing on its highs for the week, 52-week high. Time to go home. Long euros, short dollars for the weekend. That weekend trade, the 52-week trade. Remember that. So let's go to our next market. This is the S&P 500. Again, we've seen this market really do pretty well. This is again a weekly chart. We have had 1, 2, 3, 4 weeks in a row that the market's closing higher. We're bullish in that. Excuse me. We're bullish on this market. And, you know, our target zones are, we've talked about the target zones before, 1550 to 1600. And that is our target zone on the S&P 500. So very bullish. We like the base here that it built and the fact that it's broken out. And our trade triangles caught it perfectly. So let's clear the screen, go to our next market. And the next market we're looking at is going to be the Dow. Same thing with the Dow. Look at the close on the Dow. The monthly kicked in. We're now at plus 100. And as we've been saying for some time, the market's going to go higher because it's being pumped up by the Fed. They keep printing money and they want these assets to go higher. You can't fight the Fed or the tape. Now, the one question mark on this, if we go to our next market, and that's the Nasdaq, and that's Nasdaq hasn't made the same move. And why hasn't it made the same move? You see, it's still below the highs that were seen last September, and that's because Apple is 12% of the Nasdaq. And if Apple's going down, it's like having an anchor trying to fly, but you're still anchored to the ground in reality. And that's what's happening at Apple right now. It's holding the Nasdaq back. If Apple was not such a large percentage and component in the Nasdaq would be making new highs over these previous highs. But that's not reality. Okay, let's look at the stocks now. This is Weyerhaeuser. And this is a market that is actually doing very well, and we expect it to continue to do well. The trend is your friend, and we are seeing this market looking pretty well. So we got all the trends are there. I would say a pullback is probably, it's down today, it's down for the week. Obviously, the last couple of weeks we've sort of hit a plateau, but if we pull back here, I would say probably to the 29 area. It's probably an area to be a buyer, but have some tight stops on that position. Now, another big move today is Hasbro. Now, Hasbro is down about 3.5%. Now, this is a different picture here. The picture here is the fact that this market, if you look going back all the way to September, this is a weekly chart, all the way back to September, it really hasn't gone anywhere. In fact, if anything, it's still negative. There's the monthly right there. And you can sell it. The monthly came in at 35.47. It's 37.29. So you want to wait until you get a red weekly, then you can short this market. I think it's still going to go higher, still lower from where we are. So there's the picture. Really hasn't gone anywhere. So I would say this is the line in the sand. It would be 40 on the upside. If it goes over 40, then I think you've got a nice, really nice base. And maybe if you're prone to be long, you want to be long stocks, maybe that's the time to wait for that. But for the time being, there's no way you want to be long this market because you've got a trading range scenario at 55. You've just hit a high point, so you're probably going to go down to the lows like we did here, and then maybe bounce again. But for the moment, trading range in the stock. So let's just clear that screen and go to our next stock. Next stock is Yum Brands. Now, this could be setting up for a nice move. And I'll look at 2 years on Yum Brands. Now look, this is the move I'm looking at. Obviously, it's minus 70. We have a green monthly trade triangle telling you the trend, the bigger trend is still positive for this market. However, having said that, this is what I want you to look at. And let me get my telestrator back on here. So, in fact, let's just do a simple close-only chart. Sometimes it's very useful. And here's the close-only chart, okay? Big thing stands out to me on this is the fact that we have what we call a double top right here. Or we call them twin peaks in our traders lesson. So this is a double top right here. Okay? Right here is a pivot point. Now, people fall in love with stocks, they want to own them for a long time, but the reality is since May of last year, right here, May of last year, this market has really gone nowhere. Okay, that's a long time to hold a stock without it going somewhere that's positive in your direction. In fact, had you bought it in May of last year over here, you'd be a loser right now, and you don't hold on to losers. But the big thing I want to share with you is this level here, 64. And if we close down, let's say it's 62, then I think it's over for this brand. I think we'll see this market go from, we can measure it quite easily from this level, 64, up to 74. That's basically right here, 10 points. So we can see this market going down to 54 right here, which takes it all the way back to where we started. Definitely in the cards there. So watch Yum Brands very, very carefully. So let's clear that screen and see what else we have. Now, this has been the real star performer, Netflix. Look at where we got in. We kicked in right here at 84.94. Let me clear that off the screen 1 second. We came in right here on December 4th, a little over a month and a half ago, and we are looking at this market trading at 166.91. Obviously, we mentioned this yesterday with Carl Icahn making a ton of money. He made $250 million yesterday. He's obviously making a ton of money today, and it looks as though it wants to go higher. Remember, we talked about this stock based on our Fibonacci retracement. Going back over 200, 206 was the target zone. I think we're going to get there because yesterday we were right here at 151. And now it's boom, blown through that. It looks as though it's got some very strong legs to push. You see, look, that's today. That's the week in Netflix. Don't you wish you had to own that stock? Well, if you had been a member and you followed our trade triangles and this stock, you'd have been given an alert for Netflix when it hit this monthly. So you had a chance to own it 6 weeks ago, and you'd be doing actually 7 weeks ago, you'd be doing very, very well in this stock. And again, it's overbought. It doesn't matter. The momentum's with this stock. It wants to go higher to the, I think, to the 200 level. So let's go to our next market. And this is Kla-Tencor. Kla-Tencor, I don't know how you pronounce that. But again, you've got a nice move going there in this market. This is a weekly chart. And you can see how we are going to be closing new high ground for the week and the month and the year and the highs we've seen in this market. Let's go to a maximum picture. This is a really nice chart. It looks as though you've got some nice legs under this, and I think you could see this market trade up to the 65 level, which takes it back to where these highs were, somewhere a little bit more than these highs, but I think certainly 62, 63 is in the cards with this market. Excellent, excellent thing. And you can see the monthly kicked in, monthly trade triangle, 48.94. So nice profits in this position. It's on the move. And that's what you want when you have a MarketClub trade triangle in your corner. Next stock is Verisign. Look at Verisign. Big, big move. A little bit different here, though. And the reason I say that is the monthly is down while the weekly is up. So you should be out of this market. You should not be in this market because you've got a conflict. And let's just get this closer in so we get sort of a picture. So you can see there's the picture. This is going to be the highest close we've seen for quite some time. However, the monthly is still negative from 40.99. It's a little bit higher than that. So I don't think the best thing to be is on the sidelines with Verisign. Hey, we've covered a lot of stocks. This is Adam Hewison for MarketClub. Wishing you a very, very pleasant day and an even better weekend. I'll be back on Monday, so I'll catch you all then. Take care.